Just being alerted to something. Yeah, there's a little break low there. So we're looking at the 4-hour chart. Bitcoin, as you see, there is the hopeful structure there. And even if we took this low here, mid range, and took that upon there to find out there, and even there's a break beneath that sort of structure, that support line, and or that trend line. So it's the main principal trend line there. It's swung low. I mean, it's not unexpected. And why is that not unexpected? It's a sort of liquidity level. That's in that box there. It's that area of what sort of appears to be bunched up, narrow ranging type of behaviour there as it's come up from the high. And that high is, call it about 50% up from there, from the peak, from the low to the peak. It's about 50% halfway along. You can see how it does. You see the highs and lows there. So the resistance line and the support line just retracing back over to historical levels there, and you can see where it's still along that point along there, just along here as well. Yeah, it sort of hinges on quite a bit of stuff. There's a support line of that low on 10th of January, just touching down on there, just flying back and seeing what's here. And again, it's got a sort of historical reference point. Vaguely there. So just going back up to where we are, the main point, it's the creation of a liquidity level comes as a result of a sort of imbalance of the supply and demand, the bears, the bulls, the buyers, the sellers, and and at those points, that imbalance is a sort of pivot point. It changes things. Yeah, the swing highs and the swing low. See again there, that area of liquidity in there. Just trying to make that decision. Swing up high. Area of distribution along there for ready priming for a swing low, and that area of distribution is generally quite crabby. And again, that swing low is kind of, there you see how it's all sort of bunching and ready to move, right? And there's very clear definitions of the beginning and an end of that little area of liquidity in there. And again, a little bit of swing low. You see how it sort of scalps off there, comes up to that point, and they're there again. So here we are, and this is a sort of very much broader area of liquidity with some kind of record behind it, and it's just popped down there, immediately preceding there. So it's pumped up quite nicely, pause, a little bit of liquidity, so there's a decision about whether we wanted to go up or down, and so it did. The market went up, down, the bulls took over, and it's come down to this point again. So, as more people take positions in the market, these are levels where sort of the market participants will use as a historical reference point. They're sort of using it as a historical reference point to place their stop losses, or they're coming in for their shorts and such like. Their stops are there, so they might well have come in here, made the entry, set their stop loss up at 50% or thereabouts, and a range around that 50% mark. And so it's come. So they've made that entry, setting their stop losses, and they've adjusted their stop losses here, and come up again another 50% of that range. And now it's reached that point, and those stop losses are being sold off and such like. People are selling off. Well, they might be buying in. You never know. They might be buying in for the prospects a bit more of a sell off at that point. And so the outcome here at this point along here. So you can see those support lines in there, yeah, and the outcome in that area is simply a breakout from that level and a kind of a reversal back down. And is there a case for a is there a case for this sort of area, right, being the mean? Okay, is the mean much broader than just here? So is that average area just here? So you can see how that can be extended down there, can't you? All right, I'll take the mean from that low point there and maybe just tap it down there as absolute low. There you go. I'll zoom in on there just to have a little look and see. Having a little look. Yeah, across there maybe. That still has the potential to come right down. Retest. Come through this sort of mean area and retest or re-establish the support along there, which would be good, building more structure, because I only had 2 touches of these, as you can see, 1, 2, and that would be fantastic to see that, maybe come through along there. Also going to do on the fibs as well. Have a little look at the fibs. Get that well established on there. Where have you gone, fibs? And then I think this is why videos take so long, isn't it? Yeah, so rule of thumb, so here's the rejection. So unless the rejection makes it to sort of 50%, so that's clearly halfway to there, yeah? Makes it to 50% retracement of the previous kind of low, that low there, so it's about halfway down. It's going to be a low quality liquidity level. More vigorous rejection of a level, the more chances it has of holding on to a retest, and that's quite a potential. That's pretty damn vigorous. So potentially it might just sort of hover around, come to this 618 here, and that 618 being the accelerator it is, may well drive it down here. 786 for something up, maybe even, which would be good to see the overall support line. So you've got those confluence of factors. You've got the market structure in the higher time frames there. You've got the confluences of this sort of area down here, historical area, coming through to there on those fibs. Now if we pop that fibs back up again, just popping that fibs back up to there, and you can see clearly where that fibs line just lies underneath the yellow line. There you go, right there. A support, resistance, support, resistance, support there. So support and resistance. That resistance kind of turns into support line, and that's what happens. And the confluence is true. So that previous, going through there, burst through and just coming up, retesting that, and it's acting as a nice resistance line. The previous history and those confluences just going to peek out, show where that line is again. Is there anything under there? And again, you got the 5-0 under there, haven't you? On that thing. So it's really good areas of confluence in there. Just going to pop that back down to there. There you go. And hopefully that will come through. We'll see. If it does come through, that's a healthy thing. It's not a bad thing. Things go up and down. Looking at how things go up and down. It's fantastic. You've got a solid edge to exploit, haven't you? What goes up hard comes down hard. So there's a rapid ascension there. And equal and opposite being true is Newton's law. equal and opposite effect. So it's come back, rejection, bounce, and come back down with equal measure and energy there. Let's see what happens. And it's come down hard. You got a nice solid edge to kind of exploit there. I wonder what that was there. No, I won't put that in. But that was a really fantastic short. You could have really gone short on there, couldn't you? Hey, what was the percentage of that short? So confirmation, yeah, you're looking at that. Maybe confirmation and projection, and then we see that absolute confirmation and projection there. So that is indecision, rejects, comes down there, could have come back up, and then you got the absolute confirmation candle of the short there, haven't you? And that would have gone quite happily to that area there. Now 7% short in about a day. So, you got a day's work there. Just 7% on the day. That's a nice little take, a nice nibbler. Lovely, lovely. A tasty bite. It's like other little things to consider. It's time as well. It is the time phrase. So with these sort of areas of liquidity, as time goes on, that area of liquidity doesn't necessarily hold the same weight in terms of how we expect it to react to it with the move up or down. So yeah, we've got these areas of liquidity. There is a likelihood. So we've established this, and there is apparently, sweeping up the stop losses. Okay, there is is that the most extreme part of the area, or is it here? I would say probably most, a lot of that is very extreme, isn't it? And I personally people want to see this structure succeed, because if it does come down to here and comes up again, there's a fantastic opportunity to look up for. Because people want to see a breakout, they want to see a break high as well, retain the overall structure in the bigger picture, daily, weekly, monthly picture, which is a support line somewhere down here. And having it come down to the most extreme level, a stop loss would be fantastic. So that'll get swept up, bought up, and then with all that sweeping up and buying, it's going to generate some nice energy moving upwards through these sort of technical resistance areas, these psychological areas, burst up through them potentially and retest, or even as it comes up here, another phase of reconsolidation, potential breakout, who knows? And there's going to be a lot of energy. We've seen the energy here, here, and here. So that's pretty good. So, I mean, is what I say valid. So I suppose with all those what am I talking about? With those stop losses all set up, they can mark down the price as well. But we'll see. So this is what's happening here over the past 4 hours. That big red candle, people have set their stop losses, perhaps readjusted them based on that trend there, and there is a confluence of trend at this point again as well. So yeah, that trend line, absolute confluence of trend. So there's going to be a bit of a sell-off, hence marking that red candle coming, gaining some height, so some size to the main body, some decent girth to the main body, coming down, breaking low, and you know you got the risk and reward factors coming through. I'm wondering if it's how much lower it's going to come down. So, what have you got? Is he going to just sit there, bounce and range in that point there. Yeah. Is it going to break lower than that? If it does, where's it going to come from? Right. Yeah, that looks good. And that is broadly with the 618. Okay, I wasn't looking at the 618 there. I was looking at those previous sort of highs, lows over through there, top of that big fat green one. And yeah, that really does sit on the 618. When it comes to the 618, burst through there again, going to be looking at somewhere down here, aren't you? Hey, nice little testers through there. Nice. Just identifying various potential points. It does seem a bit belt and braces, but that's just the way it goes, yeah. So belts and braces, I mean, you're wearing a belt and the braces. If you've not heard that phrase before, there's a line on there what we're doing. You know, anything to keep the trousers up, just to make sure the trousers stay up, okay. So there'll be a bounce in there. There we go. So there is liquidity. Liquidity um, occurs where there's that indecision, and then people are taking profit. That happens at the extreme ends. That creates the pivot points. It happens around the expected pivot points within the pattern. Smart money will see those patterns. They will see those pivot points developing well in advance and anticipated. Set their sell orders perhaps already, and are sat on their motorboat or in their Ferrari driving around. And the computer is doing everything automatically for them there. That's where, they're taking some clear profits in there. And then the reverse is true. They can set their stop losses. They set those at that 50% mark of this overall rise. So the 50% mark. Nice, strong, real solid decline down there. Solid rejection. And setting that 50% stop losses. Hence, that big red candles come out. Broken low of the potential trends in there. Well defined by those little dotted lines. Yeah. And so that's come through, and then we're looking, is it going to range coming out, or is it going to break low even further? And I suspect it might just come down to that 618, but we will see. So that's fantastic. Thank you. Noob stuff, doing noob stuff.